respect specifically to ROI, I think this says it all, nip it in the bud. The costs of not detecting exceptions early rises essentially exponentially as the activity progresses down the business process. Once there's activity outside of the company boundary, for example, making a payment, the costs of remediating an exception rise dramatically, as I will show you in some data that we put together. But essentially, if we boil it down, and once again, just to use an easy example, the procure-to-pay process, identifying and remediating a duplicate vendor entry will prevent a possible duplicate payment down the road. It is much quicker, cheaper, easier to eliminate and clean up your vendor master file than it is to have to deal with recovery auditors a year or two after the fact. So what's the premise of the model? Well, the model that I built essentially values the time and effort, labor costs, as well as non-labor charges, for example, freight, shipping, insurance, restocking charges, things like that. Valuing these little factories, these hidden factories of effort that might not be clearly apparent to the clients, valuing them against using continuous transaction monitoring solutions such as Oversight, and comparing the costs of doing so. We considered the entire process as an example. Here's a procure-to-pay process, starting with vendor maintenance, the example I just gave you, and progressing through requisition, purchase orders, invoicing, shipping, receiving, payments, and finally, obviously our clients helping you get to this, recovery. So basically what it is we have gone ahead and quantified, and I've worked with our current client base to do this. We've gone ahead and quantified what they were spending, the time and effort that they were spending to resolve and remediate exceptions, and then taking a look at the improvements in their process and efficiencies by going ahead and using Oversight to do the same thing for them. The model is based on like I said, it quantifies the labor. So what I've done is the generic model is based on some pay rates that I got from salary.com as of national rates as of June 2008. But what we do as well for specific clients is we actually quantify what the nature of their roles are and what their pay rates are for their specific roles. So we can target this model specifically to our clients' needs. Now the key parameters that I should mention here are the number of transactions as well as the number of exceptions, the percentage of transactions that are going to have exceptions that are going to require rework. So for clients that have very few exceptions or that have very few transactions, it gets, I'll be candid, it gets tougher to identify a quick ROI. There are certainly process improvements and other efficiencies that they should consider. But with many clients, and our target market is $1 billion and above, it's not difficult to come up with a very short order ROI just based on the number of transactions that they're processing. Remember, transaction doesn't necessarily mean one invoice. It could be an invoice line. If there's one line on a particular invoice that is in error, it needs to be resolved and take it as much time as the whole thing. It needs to be investigated and resolved. Just want to point out with respect to recovery. So ROI, there are two components of ROI that I've considered. One is the operational ROI, right? So there are quantifiable improvements in using a continuous transaction monitoring solution such as Oversight to define, fix, and improve your exceptions. There's a defined ROI there. The other one is in recovery. we have spoken to clients and prospects who say, we don't need you because we employ a recovery auditor and they'll just come catch whatever has passed by. There's a fallacy in that argument, and the reason is there are a few reasons for that. One is recovery auditors typically look above the line, right? So in this case, the line is at $5,000. Recovery auditors aren't going to be going to look after, you know, an $800 target. They're looking typically 5,000, maybe it's 10,000 in some cases, maybe it's 3,000 in others. But there is a line, and they typically looking above the line. The other thing is that they're not going to find everything that they're going after. You know, we have spoken to clients who, as a broad and general rule, have agreed that the success rate of their recovery auditors is somewhere in the 70 to maybe 85% rate. So they are finding 70 to 85% of the transactions above the line that they're looking at. But that still leaves 15 to 30% of transactions that don't get looked at. And unless you know, in the case of a duplicate payment, you have a particularly honest vendor, you may have made a duplicate payment that you're not going to know about. The final point to consider is that recovery auditors typically take about 25 to 35% of the value of what they recover as their finder's fee. And when you add it all up, and once again, this is real example. This client had a little over $2 billion in spend per year. Going the recovery auditor route, it was essentially costing them $13.3 million to use a recovery auditor to get their money back, versus the oversight fee, which was just under $300,000. And let me back up and just say one other thing. This assumes a mature production environment for the oversight system. So we're not looking back and trying to fix a bunch of historical errors. We are using it in a proactive, preventative sense. And so these are some of the parameters that we have considered in our T&E model. You know, what is the cost of fraud? Clearly, in a T&E context, fraud is something that companies are obviously critically aware of. And then, is there an impact on working capital? That also applies to duplicate payments, just keeping the payment, the cash in-house, especially in economic times like this where there's credit crunch, could make a huge difference. One to consider is the value of the reduction of internal audit time. So if we've implemented a T&E solution at a client, and it's working, and they start measuring a reduction in the number of exceptions, then internal audit itself may be able to make an informed decision as to reduce the number of audit hours that they spend on the T&E process. Being able to use your preferred vendors and merchants and ensure that you're getting the discounts that you've negotiated. Policy changes that have a positive impact on cash flow or working capital, making sure that those are complied with. Consistent enforcement, just knowing that you're not going to get into any HR issues or violations because this is consistently enforced across the company. And then the behavioral changes. I think this is probably the biggest one of all, is that when people know that there's an oversight type solution on T&E, I think it drives behavioral changes, and this has been validated, by the way. It's not just I think, this has been validated by one of our very large clients, that the behavioral changes of the employee base is such that they've seen the number of exceptions drop significantly just by virtue of communicating that we have implemented an oversight solution.